In orange, we have SVOL. In blue, we have the S&P 500. If you look at the total return in the last year, SVOL is absolutely demolishing the S&P 500. Now, if you're into dividend investing, I'm sure you've heard about this new ETF that pretty much everyone's talking about. Its ticker symbol SVOL, or the Simplified Volatility Premium ETF. Now, the SVOL is an exchange-traded fund launched and managed by Simplified Asset Management. It invests in public equities and fixed income markets in the United States. For the equity portion of the fund invests directly in through derivatives in stocks and companies operating across a diversified sector. It employs short strategy and uses derivatives such as futures and options to create its portfolio. The SVOL ETF invests in growth and value stocks of companies across diversified market capitalization. For its fixed income portion, it invests in high-quality short-term debt securities. Now, SVOL was formed on May 12th of 2021, so it doesn't necessarily have that long of a track record yet. So not to get too technical, but SVOL works on a short-term volatility strategy where it sells futures on the VIX volatility index and aims to generate a lot of income from doing so. Now, to cut to the chase, this is the real reason why so many dividend investors have SVOL on their radar. It's because SVOL has a 17.5% trailing 12-month dividend yield. Now again, the SVOL ETF has not been around for all that long. But looking at the dividend history for SVOL since inception, the monthly payouts have actually been mind-blowingly consistent, considering this fund yields as much as it does. Now, what I mean by this is that a lot of these super high-yielding ETFs or ETNs have a very wide range of payouts. This, for example, is SLVO. This is the Credit Suisse Silver Shares Covered Call ETN. This is also a very high yielder. But look at the amount that the shareholders get paid on a monthly basis. It's all over the place. Sometimes it's around $1, and sometimes it's higher than $4 per month. So when it comes to SVOL, the monthly payouts have been rather consistent if you ask me. Now, this might be the most important metric of all, its total return, and again, we don't have all that much to go off of because SVOL is a rather new ETF, but matching SVOL next to the S&P 500 and using the metric total return, which means share price plus dividends included. Year-to-date, SVOL is at a 5.78% return, where the S&P is at an 8.53% return. Now, on the 1-year time frame, this is where SVOL is doing much better than the S&P 500 because of all the volatility that we've experienced in the markets. SVOL has an 8.55% total return, where the S&P 500 has a minus 4.36% total return. So in the 1-year time frame, investors would have been much better off placing their money into SVOL versus the S&P 500, which has to account for something. Now, the next time frame is a 3-year time frame, and we can't really go off that because SVOL has only been around since 2021. But for the 3-year time frame, for whatever it's worth, SVOL has returned around 14.72% total return, and the S&P's returned 52.23%. So of course we don't know exactly what SVOL would have returned if it were to have been around, but in reality it likely still would not have beat the S&P 500 because let's be real here, it is so tough to beat the S&P 500 in pretty much any market. Now, for all of you high yielding lovers out there, we have to match up all the other popular names. If we look at the total return from SVOL, JEPI, and QYield and match them all up on a year-to-date basis, we can see that SVOL has returned 5.78%, JEPI 2.17%, and QYield 12.37%. So surprisingly enough, QYield has done the best out of the three on the year-to-date time frame. But 1 year in tells you a different story. SVOL 1 year in, 8.55% in the positive. JEPI's minus 0.55%, and QYield's down the worst, minus 5.21%. So who else is sort of surprised by this? If you were to have asked me without me seeing this, out of these three names in the 1 year time frame, which do you think would have the best total return? I would have said JEPI, then I probably would have guessed number 2, SVOL, and then number 3, I probably would have guessed QYield as returning the worst. But on the 1 year time frame, it's interesting to see that because of the volatility, SVOL has returned the most by far. So overall, because of all the recent market volatility, SVOL has done pretty good since 2021. Now, is SVOL something that I would want to make up a large portion of my portfolio? I would personally say absolutely not. But I will say this, for the investors out there that do have an appetite for very high yielding instruments, SVOL, the Simplified Volatility Premium ETF, is definitely one to look into. If you enjoyed this video, make sure to please drop a like in the video and subscribe for more. Thanks as always, guys, and I'll see you in the next one.